Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, November 23rd. U.S. stock futures are pointing to a sixth straight losing session as investors digest a raft of economic reports. Today's calendar is loaded with data because the markets will be closed tomorrow for Thanksgiving, and trading is expected to be extremely light in a shortened session on Friday. We'll bring you the results of the October durable goods orders and personal spending and income reports, as well as the weekly jobless claims numbers after the opening bell. But in the meantime, the focus remains on Europe. A Belgian newspaper reported that the proposed rescue plan for the troubled lender Dexia may be unworkable. Belgium and France, which jointly own the bank, reportedly are in talks to renegotiate the bailout deal, with Belgium pushing France to take on more of the costs. But France's AAA credit rating is already in question, and any renegotiation would put it at even more risk.
That news on Dexia is driving the yields on French and Belgian government bonds sharply higher, along with Spanish and Italian borrowing costs. And bond investors are even questioning the health of Europe's strongest economy, Germany. A planned sale of 6 billion euros in German government debt was poorly received this morning, with less than two-thirds of the bonds drawing bids. Meanwhile, we're seeing more signs of contraction for the Eurozone economy as a whole. A preliminary reading of October manufacturing in the region showed a small improvement from September, but the sector is still contracting, and private sector activity is falling even faster. Following the data and the disappointing German debt auction, the euro is slumping against the US dollar, falling below the 134 mark.
It's not just Europe's manufacturing sector that's slowing down. We also got some troubling data from China this morning. That country's preliminary Purchasing Managers Index fell to a 32-month low in November, well below forecasts. Economists had been expecting Chinese manufacturing to continue growing at a slow pace, but the report signaled a contraction. All this weak global economic data is driving investors out of assets perceived as relatively risky. That's hurting stocks around the world, but it's also weighing on most commodities. Right now, crude oil is falling by about $2 to right around $96 a barrel. And even gold, usually perceived as a safe haven, is dropping below $1,700 an ounce.
On the corporate front, one big stock winner this morning is Deere & Company, jumping nearly 7%. The farm equipment maker reported a 46% jump in fiscal fourth quarter profit on 20% higher revenue. Deere also projected earnings for the next fiscal year that are above analyst forecasts. Meanwhile, AT&T may open modestly lower, as it faces another roadblock in its attempt to buy T-Mobile USA. The Federal Communications Commission now wants to refer the proposed $39 billion acquisition to an administrative law judge for a hearing. The Justice Department previously came out against the purchase on antitrust grounds. And finally, keep an eye on Merck this morning. It agreed to pay $950 million to settle criminal and civil charges related to the misbranding of its painkiller Vioxx. The Justice Department said it made false statements about the drug's safety and engaged in off-label marketing, pushing doctors to prescribe it for rheumatoid arthritis when it was not approved for that disease. Vioxx was pulled from the market in 2004 after being linked to heart risks. Shares of Merck are dropping 1.5% on the news. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.